Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money News Roundup, where we talk about the biggest moves in the markets this week and what's driving them. I'm Merryn Somerset Webb, editor-at-large at Bloomberg UK Wealth.
And I'm John Stepek, senior reporter at Bloomberg and author of the Money Distilled newsletter.
Oh, he missed out award-winning. He doesn't want me to tease him anymore.
I just feel the people are bored. It's just they've had enough.
No one's ever going to be bored with your awards, John. Not going to happen. Right, listen, speaking of awards, I should have an award.
Yes.
You should have an award.
Yes.
You know, I was looking up some of my articles about gold this morning, not because I think about myself a lot or anything like that, but because I just wanted to see how long we'd been writing about gold, like 20 years.
Yeah.
And it really such a long time.
Been a long time.
And I pulled out a few 2006 was one of the most sort of prescient ones I found, and then 2007, 2008, 2009, literally every single year. You will regret it if you do not hold. You will regret it if you do not hold. I mean, we're a little early sometimes, with little ups and downs along the way. But here we are now.
Yeah, and honestly, you were very good at calling the top in 2011, I seem to remember.
Yeah, I'm just going to take that award. Yeah.
Yeah, no, you wrote an editor's letter for Money Week saying, you should maybe take profits now. And I was kind of, that's really...
Yeah, she knows nothing.
Right.
This is the greatest bull market of all. Ignore her. Just to be clear, listeners, I won't be able to do that again. There is no way I will get the top right twice. It will come and I will miss it. Almost definitely.
Oh, that's a shame. I was hoping you were going to tell us something. But...
I'll try, John. I'll try. Anyway, a little pullback today, over $4,000 and then down a bit. But by the way, actually up in sterling terms today. Not slightly, but a little bit. And then there's
4,
silver.
000.
Yeah. John has been waiting for silver for so long. Haven't you, John?
I have. I mean, purely as a spectator. But yeah, silver at $50 is, I suppose it's the thing I've been looking for is that's quite a worrying signal in some ways, or it's a breaking new ground signal. And I'll be very interested to see where it closes today, because if it closes below 50 today, having gone up through it, then I'll probably be more worried that this might be the beginning of a
now
proper
is it technical
pullback.
Analysis?
Well, it's the resistance, it's the support, it's the ups and downs.
Absolutely foolproof, that stuff.
Yeah.
Foolproof.
Foolproof. Yeah.
All right,
I've
what's
got
the
Japanese
signal,
candles
John?
all
What's
over
the
place.
signal? I mean, what's the message we're getting from precious metals here? Because, by the way, it's not just silver and it's not just gold, it's palladium, it's platinum. All the precious metals are massively outperforming everything else. And the Turkish portfolio that we wrote about the other day, equities and gold, amazing. But equities and gold, they're not supposed to go up together like this.
Yeah, I suppose this is why it's getting called the debasement trade. And the debasement trade is the Turkish portfolio, basically. It means you can't trust the stuff that is denominated in fiat currency anymore.
You can't trust cash.
You need real
You can't trust
assets.
bonds.
Yeah.
You need real stuff.
I do think also there is a bit of, it's going up and it keeps going up and it's gone parabolic. And I don't know about you, but I think in the post-Bitcoin era where, it's an asset went from, $20,000 to $100,000 and no one really
Your
has any
regular
idea
reminder
how to
that
value
only
it.
one of your hosts holds Bitcoin.
Yes, I'd silver for that, Mar. But yeah, if that can rocket like that, then I think there's much more of a sense that, well, actually the sky's the limit for anything. So although I do... I have more faith in gold's fundamentals, whatever they are, than I do in, for example, Bitcoins. I can also see how the fact that everyone's seen these things happen in the past gives momentum trades much more room to go.
And retail investing is really picking up, right? Retail flows into ETFs and also retail into physical. Right? We keep hearing about various outlets having shortages of physical gold and silver because the rush is so intense. And either that's massive FOMO, I think one of our competitor organizations referred to retail buyers going in this week purely out of FOMO, which I think is rather patronizing.
It is kind of patronising, especially after recent years. I don't think you can... I really don't actually think you can call the kind of retail investor the dumb money as always been.
No, I think there is maybe just more of a sense among all investors that the ground is shifting under our feet. The monetary ground is definitely shifting. I've been out and about quite a lot today, John, and I've talked to quite a lot of people about the ideas that Roger Lee had when he was on the podcast a few weeks ago talking about the fiscal event coming for the UK. And he was talking about it being not a certainty, but definitely not a non-zero possibility that the UK would have an unpleasant fiscal event. That's a nice economist euphemism for you. But when you think through it, it's very hard to imagine what prevents a fiscal event. What prevents the UK hitting some kind of fiscal wall, and the only thing that stops it is a phenomenally successful budget in November. And it's hard to see how we can have a phenomenally successful budget in November, because it's hard to see how the Parliamentary Labour Party would accept the spending cuts and the manifesto busting tax rises that would be necessary to make it what you would consider to be a successful budget in fiscal terms, right?
Yeah, no, I mean, I agree. And I think, one thing that is interesting politically was actually the Japanese election. And I think one of the things that gave the impetus to gold and the rest of them this week was the idea that basically Japan elected a female prime minister, or soon to be probably female prime minister, who is more dovish, or perceived to be more dovish and more like Abe, and that she'll encourage more money printing. She'll encourage the Bank of Japan to keep interest rates low. And whether that's true or not, I think that's given a bit of an impetus to the overall debasement trade. And I think, I do think the idea that we'll end up getting yield curve control, basically, which is what we're talking about when we're talking about returning to QE.
He means just keeping interest rates low, even though in a free market they wouldn't be low.
Yeah, you have to print money to buy gilts to stop them from blowing up, basically. You can see that.
Yeah, and again, this is what Roger was talking about when we were having this conversation, that, you get to an early point where gilt yields start to rise beyond the level where it is sustainable for the UK taxpayer to keep the show on the road. And at that point, you need a massive bout of QE to keep yields down, at which point the Bank of England, in order to hang on to some tiny vestige of what remains of its reputation, would have to demand some kind of fiscal restraint from the government. And that's where things could conceivably go horribly wrong. Or on past performance from these MPs will definitely go horribly wrong.
Well, can you imagine
Was that unkind?
The Bank of England? Not at all. Can you imagine the Bank of England kind of try to take the IMF tone with the UK? I just don't think that would be possible. I think there would be a reasonable argument that the central bank can't dictate to democracy what it can do. And then, of course, what happens is everything does go pear-shaped. But that was the point of calling in the IMF in the 70s. It was to give a kind of neutral referee
to make it happen.
And I'm just not sure. I don't think the Bank of England could play that role, if I'm honest.
But at some point, the turn only comes when the population accepts the turn.
Yeah.
And I wonder if retail purchasing of gold is the beginning of the acceptance of the turn.
Yeah,
that, that there's a problem and something has to change, and a contractionary seeming disaster has to be part of that change. Anyway, too depressing. Let's not talk about that anymore.
Well,
Far too
depressing. I would say it's really interesting that, again, and we've talked about this before, but it used to be the 60-40 portfolio, and if you talked about putting any gold in there, you were on the fringes. And the other day I saw Ray Dalio, who obviously is a bit fringy, but he was saying, or as fringy as the world's biggest hedge fund can be, but he was saying 15% is what you should have in gold.
Morgan Stanley, didn't they put out a thing saying 20%?
Yeah, and you're kind of like, wait a minute, guys.
Wow, hang on, we've been telling you this for years, and now suddenly you're 20% here and 20% there, and But then if you think about it, why would you put any bonds into a portfolio if you don't trust paper anymore? You don't want cash, and you don't want bonds, and you have to replace the what felt like the risk-free element with something else. What's it going to be?
Well, the other interesting thing was, and I don't know if you've seen this, but Meb Faber, the guy from Cambria, I think it is, he's very good, and he's always putting out stuff about portfolio construction and all the rest of it. He was making the point the other day, if you'd constructed a 60-40 portfolio, but it's substituted bonds for gold since like 1973 or something like that, you'd have exactly the same return.
Wow.
Slightly higher. For gold, actually, slightly higher, but
go gold.
And he did it for another couple of things. And his basic point was that you could just have substituted gold entirely. Well, gone for actually the Turkish option, but a 60-40 Turkish.
Interesting, isn't it? We probably now are overthinking, but I keep thinking about what Dominic was saying the other day. Dominic Frisby on the podcast about gold that we did earlier in the week, about how gold is pretty much the only way you get to touch eternity.
Yeah, like, that's a good line.
I love that.
A good line.
I loved it. I think we might getting a bit religious on the pod, but it was rather a lovely line. I've been kind of touching my rings ever since, going, oh, eternity.
See, mine's platinum. I'm not even sure where that comes from.
Well, that was very fashionable when both of us got married. My wedding ring actually is platinum. I've been touching another ring. But when we got married, not John and I, obviously, just to be clear, listeners, John and I are not married. But we got married around the same time, and I think it's very fashionable to have a platinum ring.
Yeah, it was. And unfortunately, I'm much more a fashion victim than you are. You went for the classics, so...
Yeah, well, I think, we don't know what fashion victims we are until it becomes clear. Now, listen, before we go, I want to talk about one more thing. Stamp duty. Actually, I'm not going to talk about that, actually. That'll just get us in trouble. We're not going to talk about that, but we're going to talk about stamp duty. And
I need to find out what that was after the show.
After the show. On the cuts that you guys don't get to listen to. So Kemi Badenoch, in that speech that apparently went down very, very well. We weren't there, obviously, you and I, because we don't do that kind of political stuff, but went down very well. She talked about just getting rid of stamp duty across the board.
Yeah. Well, actually, not across the board.
No second homes.
Yeah, second homes still have it in the commercial property. So, but basically the stuff that normal people are used to paying.
Yeah, and this makes sense. And we've always loathed stamp duty. It's the most inefficient most inefficient tax. It ruins lives. It makes it impossible to buy first time because you've got to come up with such a lump sum because, of course, you can't add stamp duty to your mortgage. It prevents older people's downsizing. You might say it shouldn't, but it does. It's a psychological barrier to older people selling their houses and buying another house. They don't want to pay that stamp.
Well, so you're not going to have any downsizing money once you've paid, 20 odd grand for whatever they're downsizing from either. Yeah. I mean, I think, there's very rational economic reason for it.
So, it just gums up the market.
Yeah, it is. I mean, it's terrible. And the other thing is just like, one of the things I find interesting is as soon as you talk about this, because everyone's been so brainwashed, it's like, all right, well, if you give up the, 5 billion or 9 billion or whatever it's going to be at that point from stamp duty, what other tax are you going to raise? And you're like, look, you're going to encourage growth. Because say you increase the number of transactions by 20%, that means you're increasing the amount of money going around the economy. You're increasing the number of new kitchens getting fitted. You're going to make more money elsewhere.
For work.
Yeah, exactly.
All that kind of thing.
Yeah, so it's you don't have to replace it directly. And also there is this other option called cutting spending, which unlike, the Labour Party, the Tories are more than happy to do ideologically. Yeah. So one thing you can be sure of is their backbenchers
say that, but they haven't done that for years.
Oh, no, yeah, absolutely.
So what we're going to have to call the new Tory party is
probably
willing to cut taxes or say they are, but, it's a tough gig not cutting taxes, cutting spending in the UK.
It is, although I suspect it's not going to be as difficult come the next election.
Come the fiscal event.
I feel austerity kind of was drummed up somewhat, but come the fiscal event.
Okay, do you know what? She should move on to abolishing stamp duty in the equity markets. It's a logical next stage. I mean, now I think about it, I'm rather surprised she didn't. There was an interesting report out from one of the brokers earlier today pointing out that actually a very large number of people are put off investing in the UK market because of the stamp duty. You always think it's kind of niche and marginal, but it's really not. People know that they pay more to invest in than they do in other countries. Well, and it's very off-putting.
One of our colleagues, Chris Hughes, wrote an interesting piece this morning about AstraZeca's going to upgrade its US listing, and it's going to go from ADRs to the kind of full-blown US listing. And basically what that means is you're going to have a sort of almost like a test case market where people can buy in America, not pay the stamp duty. And that'll basically be easy because most brokers would allow you to buy AstraZeneca in other place.
Absolutely.
So, we'll start to get a bit of a kind of cross-country comparison, and maybe it'll be an easier case to make than it currently has been.
Yeah.
I mean, I can see why she didn't mention it because it's such an easy thing for the opposition to turn around and say, it's tax cuts for the rich. But I don't think that'll survive contact with reality for long.
No, I don't think so because as we say over and over and over, pretty much everyone in work in the UK now has an equity portfolio, whether they know it or not. So that is a tax cut for everyone. And it's also one that might actually drive activity in the UK, might actually drive some growth, and certainly would be, as we said so often, would be a signal to the rest of the world that while we might not look like it, we are actually open for business, some business anyway. Yeah. Business that fits inside our regulatory environment.
And to be fair to Rachel Reeves, I'm pretty sure that she probably is on board with that. It's just...
Well, she's been told enough times.
Aye, exactly.
Right, we can hope, John, can't we?
Yes.
We can hope. I hope that you are all enjoying your gold and silver profits and your Bitcoin profits.
We've had plenty of emails about that, which is quite nice.
Yeah.
Yeah.
Send us more. Send us questions.
Yes.
And don't blame us when it all goes wrong. Thanks for listening to this week's Merryn Talks Money debrief. That wasn't financial advice, by the way. We do not give financial advice. Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review and subscribe wherever you listen to podcasts. And keep sending questions or comments to merrynmoney@bloomberg.net. You can also follow me and John on Twitter or X. I'm at MerrynSW and John is John_Stepek. This episode was hosted by me, Merryn Somerset Webb. It was produced by Sam Asadi and Moses Andam.